Santa Barbara City Council's Finance Committee will now come to order. Are there any members of the public wishing to speak on items not on today's agenda? Seeing none, let us go to the first item.
Good afternoon, committee members. My name is Jeannie Wilson, and I'm the Treasury Manager. And today I'm here to present the quarterly investment report for the quarter ended September 30th, 2013. On the overhead is an overview of the investment quarterly report. I'll touch on economic highlights first. Basically, the Treasury rates have remained at exceptionally low levels. That's no surprise. You probably keep hearing this every quarter for the last 2 years. Fluctuating is the 5-year rate since June of 2013. This is an interesting trend. The rate has actually doubled since 6 months ago in March, but is again trending downward. So we really haven't seen much stability, but you may have heard in the news or seen reports of rates increasing. They're still kind of fluctuating up and down, so we're keeping a close eye on that. The Fed forecast anticipates low yields continuing into the near future. As far as portfolio activity, we have 3 million agency securities called or matured during this last quarter, and we purchased 13 million in securities. We had a lot of maturities at the end of June or the last quarter, so we had some additional funds to invest in this quarter. Portfolio interest has remained somewhat steady in the last quarter at $462,000, but the portfolio yield is slightly down this quarter to 1.255. The next slide is an overall summary of the investment portfolio. You can see that we have, with the state of California, our LAIF balance is $29 million. We have some certificates of deposits or CDs, $8 million. Treasury securities, $10 million. Federal agency issues, $91 million. And some corporate media term notes at $10 million. We've got the Santa Barbara Airport promissory note, which was recently adjusted downward. With the revision to that note at $5.6 million and some money market funds for a total of $160 million in our portfolio for the September quarter ended. So here's a snapshot of the historical since September of 2010. You can see that the city's portfolio reflected in blue has been declining. Again, that's due to the low interest rate environment. The rates, as I mentioned, have in the recent or the last few months have increased slightly on the 5-year, but basically the 2-year has stayed fairly low. So what you're going to see is we've had investments that we may have purchased several years ago, since we generally buy in the 2 to 5-year range, that we're earning higher yields. When those investments mature, we then have to reinvest in the lower interest rate environment. So you'll see this trend continue for the near future or short-term future.
So in that slide, is the green supposed to be the 5-year?
The green is reflected on the next slide.
Okay.
This slide will show you a 2-year, the LAIF rate, and the green is the 2-year, and then the 90-day.
So the 2-year is up slightly as well.
Slightly as well. Not as significantly as the 5-year, which you'll see in the next slide. Yeah. So can you get that up a little? Okay, so what you'll see is in the red, the top line is the city's portfolio, and then that fluctuating blue line is what I mentioned is the 5-year. And so you can see that it's peaked, it's dropped, and it's now somewhat leveling off in the last few months. And then below that, and I know it's a little difficult to see, I believe it's in the green, is the 2-year, which has been a little bit more steady. So again, the city's trend, as you saw in the previous bar graph, is a slightly lower trend. But again, as we had maturities and then we invested in the lower interest rate environment.
And just so you know that while everything kind of stabilized, at least on the short-term basis, our rates or our yield are going to continue to go down slightly. And our interest income, as you'll see, will also go down. Even though interest rates may start to rise in the near term, it'll take us a while before we start to catch up to that, because we'll have to reinvest in the increasing interest rate environment, and that'll take at least a year.
So the final slide will show some historical interest revenue from the portfolio from 2012, 2013, and then the current quarter for this fiscal year. As Bob mentioned, the interest rates have been declining. They will likely decline additionally this year. Over the last 2 years, you can see that the decline was well over $500,000 in each of those years. So again, we'll be monitoring that. We can anticipate a decline again this year, just due to the environment of interest rates, but also we did renegotiate that promissory note for the airport and basically drop that rate by half. So that will have an effect on our interest income for this fiscal year. And with that, I'm happy to answer any questions.
Okay. Questions from committee members? I believe that we're done. Thank you very much.
All right, thank you.
Meeting adjourned.